Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
All right, good morning. Ooh, wait, I forgot to turn on the lights. I kind of like this aesthetic, actually. I feel like, you know, dark, mysterious figure. But no, let's turn on the lights. How are you guys doing this morning? Feeling pretty okay. You know, I did not feel good when I woke up, but I feel pretty good now. And I forgot to start the live stream, so there's probably nobody watching except for Uzi. Uzi's always there. But let's go into the charts. Oh, well, hold on. Let's see here. We don't have anything at the bottom of the hour, do we? No, we don't. Okay. So here we got the 10-year treasury. And so you will recall that we had some of this downside action on kind of, I would almost say, recessionary data. And we have climbed back up here around the holiday and everything. Kinda interesting. Oh, this was non-farm, so we rose after the non-farms. And we're higher, a little bit higher this morning, but it's been pretty tight the past few days. Market is kind of doing, kind of does that around the congressional testimony. Okay. I don't know why my freaking little indicator like moves over there, but whatever. Okay, S&P 500 a little bit higher. Oil back and forth, but it is overall, I would say, lower. There has been some headlines suggesting that Israel is kind of massing and preparing to go north towards Hezbollah. And so that has kind of driven oil higher and then back and so forth as those headlines come about. Now, gold and silver looking pretty good overnight, looking like they're maybe gearing up for another run. And we got copper also coming up. So I think that we have been getting some data out of China that kind of is a little deflationary. Or let's not say deflationary, but less inflationary, but also good, I think. I don't know. I don't know how to describe it. But there was some data in China, and that seems to be what's driving this. And then we got the Japanese yen. Well, overnight, they pushed down again a little lower, and we are kind of like skidding along the bottom again. So, not entirely sure what to make of that. And then we got Bitcoin trying to recover that 60,000, but not quite there. All right, so looks like we got everything running here. Okay, I apologize for not creating the live stream when I usually do, but it looks like you guys all found it. Hey, Paul, good morning. Uzi, Jake Sprout. Wait, I thought there was Jake Sprout, but it's Jake Sproul? Anyways. All right, so let's come in and do our notes here. We'll move today to... oh my. Have I been moving it to 06? It's 06, 09. MD. That's okay. We never look back at these anyways. Writing it is the important part. And maybe you never look at it. That's okay. Okay, so we got Powell testimony again. I should just note that the second day of testimony tends to be less significant, but can still generate headlines and move the markets and still kind of results in a little bit of a sleepy market early on. Okay. But then we also have 10-year auction today. That's pretty important. Okay. We got Goolsby and Bowman speaking later today. But that's about it. I should note it's a Wednesday. Wednesday tends to have more activity. Okay, so I think that what we should see today is a fairly tight and slow market, but a very, very slow, slightly biased to the upside move. I think that if we're taking a trade going long for the auction, that it doesn't necessarily make much sense to be in it like right now, because you might not see those long flows or the effects of that until we're like going into the auction. So that means that we don't get, I don't think we have super great setup for trades today. Now, the other thing is I did, oh, well, I'm not going to go into it. I'm going to switch it. I gave you, you got to see it for like 5 seconds. Almost split over here. This is our volatility projected range. And I'm going to be on the Ninja Trader live stream today. They asked me specifically to talk about that. So that's why I was kind of making that nifty little scatter plot. But you'll have to come on the Ninja Trader live stream if you want to see me talk about it. It is a little bit different from last time I did this exercise, so maybe a little interesting. Amir says, yeah, it's a slow market. Yeah. You know, and it may just, well, tomorrow is the blockbuster day, right? Because tomorrow we get CPI. Is it CPI? Let me double confirm that. I'm pretty sure it's on Thursday. It is on Thursday. And PPI is on Friday. So tomorrow will be the big day. But in the meantime, meh. It's just kind of be meh. So we can talk about whatever we want. There was this discussion I want to see in here. Where they were talking about platforms. Smitty says, what peeves me is the pricing structure with Jigsaw. I'm just going to say pricing structure because that doesn't make any sense to me. Maybe it's that he doesn't like that there's different levels of the education. But like nobody buys the education. Very, very small number of people buy the education. Jigsaw was big on the promo emails the last couple of weeks. I don't know. Have they? I have noticed some emails, like they were having emails about 4th of July sales and things like that, but I didn't notice it being that, you know, out of the ordinary. But maybe it is. I don't know. I always kind of wonder, you were getting emails about their affiliate program, really? Well, that kind of reminds me that I should get to work starting our own affiliate program. Let's increase the price a little bit. I think that everybody, if you've ever thought about getting my indicators and you're kind of like, well, I don't know if I really care right now, I don't know, you should do it now, because I'm going to increase the price to make a room for you guys to make money doing affiliate stuff. I think like $50. I'm thinking you get a $50 affiliate commission or whatever that we add onto the product. And like that would be like the easiest affiliate program ever, I think. Like to do. But I don't know. But anyways, I kind of wonder with these sorts of things, like how much you make, and like because somebody like oh my gosh, you know what, it is too early. I was sitting here like, well, I kind of had a hard waking up, but I feel pretty good right now. But maybe I'm not 100%. maybe I'm not 100%. Peter, Peter, he lives off of that, and I wonder how much the difference in income that you would get from it would matter. I would think that for him that it wouldn't really matter, but at the same time, if there's seeing an opportunity, there's something tells you that like now is a good opportunity to market and stuff, like you go for it, don't you? I don't know. Is that volatility projected range in TradingView yours? Yes, it is. So in order to use the volatility projected range, you have to see the VIX, and most NinjaTrader users do not get VIX data. The best way to get VIX data is to you're getting CQG Continuum, and there's an extra $10 package that will give you the VIX and a bunch of these other indexes, like what do we call this one? These are these indexes that tell you like how many stocks are moving up versus down, and that sort of stuff, right? So if you want, like, it's basically like metrics about the indexes. So if you want that data, you can pay like $10 extra for it, and then you get the VIX data. And so in order to deal with that, because if you're trading the S&P 500, I think that watching the volatility is, advanced declines, but I forget what the ticker symbol is. Is it just tick? Maybe it's tick. Yes, that's what it is, the tick index. Anyways, I think that if you're trading equity indexes, that is something that you want to pay attention to. And so that's why we created the version of it on TradingView that allows you to look at that information a bit 10 minutes delayed. But if you want to look at it in NinjaTrader, you have to pay for the data, and you have to pay for my indicator suite. And I will make that scatter plot available too. This should be nice. I think that I want to wait a few weeks on making the scatter plot available to you, though, because I kind of want to make it so that a little bit more generalized. Yeah, I want to make it a little bit more generalized, because I want the thing for you to be able to change the subplot so that you could change it to like a different indicator or something like that. So the tick index, I had it on my old data plan. Wait, your old data plan? Did you change data plans lately? Are you not on the kinetic data anymore? So to do that, the NinjaTrader gave me access to their kinetic data. So that's how I was looking at it. Kind of been thinking there was like you get access to it, but you still have to pay for it. And I forget how much it was for ecosystem partners. It was like $100 or something, but maybe I shouldn't get it. I've also thought, you know, I don't know why, but it just keeps popping back into my head to get the DX feed data for stocks and look at order flow data on stocks. I went with the data plan NinjaTrader provides. I only pay for what I need now. The kinetic stuff was $122 a month, and now I pay $40.
Block buy.
Oh, so are you just getting Continuum? Which was the one that I kind of didn't like. Miss M. Brown says, is that similar to lizard indicators? Are we talking about my indicator suite? I would say kind of, yeah. So I really like, by the way, I really like the lizard indicators. I feel like that what you're getting for the price is well worth it. They have so many indicators in that package, so you're getting a really, really good deal. Maybe even better of a deal than you get with my indicator package. My indicator package has a little bit more advanced indicators in it, which is to say that what they are doing, like especially when you are aggregating information about the order book and doing data analysis on that, it gets really complicated. So that's where the price comes from mine. Honestly, if I priced it the way that like the market pricing is out there, you know, I would be selling it for like $1,000 or whatever. Just like, but I don't know. There's this weird thing where in the market that we're in, like the standard dynamics of supply and demand don't function the same. Like you can get these weird situations where you charge more for it and you'll get more sales because like people think, oh, that must mean that it's really valuable and worth it. And if it's not, you know, and if I'm only charging $100, they think, oh, it must be junk, right? But I price it the way that I do because I want everybody to have it. I feel that there are some tools in that are extremely essential. I really don't understand how people day trade, especially commodities, without knowing what the value of the currency they're trading in is doing. So that synthetic dollar index, I think, is really important. You can kind of get by having a chart of the Japanese yen and the euro up, but it still is just not quite the same as having the actual dollar index up, and I find that that's really, really important. Spreads are super important to look at, and regardless of what market you're in. Here in the treasuries, it's like we're looking at the yield curve, so we think so it's really important. But you know what? If you're in equities, I would chart the spread between the S&P 500 and the NASDAQ, for instance. If you are in oil, you're trading oil, I would probably plot the difference between sweet light crude and Brent crude. Or maybe you would chart the crack spread, which is the difference between crude light oil and like heating oil. If you're in some of these commodities, you might chart the difference between some of these different commodities, right? So there is a free version of the spread indicator out there, but you have to go in and like update the instrument every month, and like it's a huge pain, and that's why even though a lot of people have access to the spread, they don't actually use it. But my indicator auto updates based on the instrument on the main chart, and also has a bunch of other additional features that allow the spread indicator to work on like daily charts. It allows it to handle live data versus replay data differently, and show you which data was live and what was not. Because when you get into spreads, there's all this complicated stuff about like when this instrument was at its high, And this instrument was at its high. They weren't necessarily at its high at the same time. So that doesn't necessarily mean that the spread at its highest point was actually this. And you have to like look into the candle to see that. My indicator deals with those sorts of problems. Does it include the code? No. No, it does not. I am getting into some things though where like I am gonna be providing some code. So the big thing that I did recently and what should be in the next release. Actually, I can show you what we've got keyed up here. Do I have it over here? Yeah, I do. So we added a new indicator called news warning, and it also has a little drawing indicator called a news event. And what that will do is it will give you a warning when the news is coming up, and it will also has all of the historical news events, so you can back test with robots that are told to not trade during the news. Because if you're doing like an optimization run, right, the moves that happen during news are going to be huge. And so your algorithm is just going to optimize towards whatever the news happened. And that probably, whatever happened with the news probably has nothing to do with the more fundamental market behavior that you are trying to tease out, right? So telling it to just not trade during those times might help you better optimize your algorithm. So I have that news event indicator, and I have a strategy that uses it. And it's like it's a kind of an advanced strategy, advanced in the respect that it has all of the additional logic to like manage the risk and stuff too. Like it will, you know, if you have so many losers in a row, it will stop trading for that day. It will limit your risk. Like I can only lose a certain amount in a single day, but those sorts of things. It needs a little bit more work, combining some of the things that I've done in other indicators and going into that. And then when you're making your strategy, you just inherit from that strategy. And so that advanced strategy, that is something that you should have the code for. So I think the way that I'm going to do that one is like it will be a separate download. Namra says you probably make more by running it as a subscription if that's possible. You know what? We actually, that's what we did in the beginning. In the beginning, we turned it into a subscription, and it was like if you subscribed through YouTube, then we gave you access to the indicators, and we just updated the just updated your license month by month. And there was two problems with that. The first problem was that there was a lot that I had to do on my side to like deal with that. And the other issue is that people didn't want to take on a subscription. You know, it's kind of that like it's going to do it every month sort of a thing is we get more people that want to just pay the $100 up front than we had when it was just a $5 or $10 a month subscription. So that's why we switched over to what we do. And the thing is, most live streams, I don't talk about my indicators at all. Like I should be like relentlessly promoting it and so forth. I mean, look, it's I make money off of it, right? $100 a pop is not insignificant. With the amount that I'm seeing, like some people out there that like really aggressively push indicator packages and stuff, I could potentially live off of it. But you know, to me, it's just a side thing. Again, I want everybody to have it because I think that it's an essential tool, and the price is really kind of more like that helps me to maintain it. You know, like there are costs to run the website. There's, you know, all those sorts of things. So, and the ongoing development. You know, I wish that I had more time to spend on the indicators. I did put a good amount of work into them the week before last, where I had the week off. So it's good. But I need to spend more time making videos and working on my momentum strategy. So, but like I said, I think my next plan on the indicators is to create an affiliate program and increase the price so that you guys can promote it for me, because I'm so terrible at promoting it, right? Out there, they may not be as advanced as you have stated. I'm not sure I understand what you mean by that, but I don't know. It's kind of funny. There's, like, again, there's a, I hate talking about this, so I'm going to speak in like very generalities. There was an influencer in the space that was selling NinjaTrader indicators. And he was selling them for, like, he had a package that was like $3,000 or something like that. And I never downloaded the package, but from what everybody told me, it was trash. It was just like other people's indicators that he just like changed the look of them. And it recently came out, his broker statements, that he had lost in this one account almost $1 million. So where was he getting $1 million from? From selling his indicators. And I'm like, holy crap. Holy crap. And in my mind, it's not like, oh my gosh, Seth, I could be making $1 million off of your indicators. What are you doing? No, it's not that. It's like, when I think about that, I'll think of all of the resources that I could be putting into this to make it even better and to make the edge that we get from the even more. That's kind of what I think. And so I want to do better with that. I don't know how. I'm not going to relentlessly spam people like some people do. The scatter plot, no, it's in NinjaTrader. So typically, I would do the scatter plot in R or Python and, like draw a picture. But I wanted to have one that you could just pull up in NinjaTrader. So that's where I was saying that I think I need to update it a little bit. Like, because it's an XY scatter plot, right? So and right now it's an XY scatter plot for the volatility. For implied versus realized volatility. What I need to do is I need to make a different indicator that is daily implied versus realized volatility. And that, so like those are those two indicators, and then have my scatter plot have those two things selected as the default data series underneath. But then you should be able to change it to whatever other thing that you want to look at and make your own scatter plot. That's what I want to do. I imagine the news indicator will have lots of demand. I don't know, Namras. I don't know. I mean, it should. But I think that the number of people out there actually doing like serious back testing is actually pretty small. But it's not every programmer that has much knowledge of markets. It's true. It's true. Like the whole thing here is that there are some pretty essential tools that I think every trader should have that are almost kind of necessary in order to be competitive. And like none of the platforms have them. Some platforms will have one of them and not the other ones. Okay, like NinjaTrader doesn't have a spread indicator, but if you go to Iron Beam, for instance, they have some of that stuff built in. This is like that sort of thing. Or they do have a spread indicator, but they don't have all of the features in a spread indicator that you probably need. If I buy the indicators, will you finally use the money to buy the market data? To buy which market data? There's so much data, man. There is the indexes. Yeah. So there's three pieces of data I'm looking at and kind of thinking about right now. One is the index constituent data, like the tick and volatility index. I would have to like switch off of Rhythmic to get that stuff, so I don't think that one's happening. The other one is order flow data for stocks through DX feed, which I really, really loved when I had. And if we did that, we could make that a larger part of the stream and start looking at stocks. That would be a big help for the stream, because people talking about. Well. And then the third one is the Norgate data. The Norgate data, which gives us historical data for different futures, so that we can actually, the Norgate. Okay, I already got the Norgate data. I already bought the Norgate data. Over the last week, yeah. So again, the week before the 4th, I took the week off because I had to use it or lose it with because at my day job, they don't carry your vacation over from year to year. That's what I always did at my last job, is I always kept that like the maximum amount that you could carry over. So I always had this huge balance, which ended up being like 2 paychecks worth. It was like 1 or 2 paychecks worth extra that I got when I left them. But anyways, this one, they don't carry it over, so I had to use it. And the 2 things that I did was I, did the news indicator, and I started getting into stuff with the Norgate data. So I have something that like downloads the Norgate data and actually uses it and does the back testing and everything. So I know that the data works, but getting like the full strategy working is didn't work. So I was using somebody else's base code, and I think that they have a really solid strategy to start with, but the Python libraries is in a complicated place. So one of the libraries that people were using to do this sort of stuff, what is it called? I don't even remember what it's called. Actually, I'm over here. Yep, it's this one right here. Zipline. Okay, so they were using Zipline, and Zipline was created by Quantopian, which shut down shortly after COVID. So there's somebody that's made like a Zipline Reloaded or something like that. Yeah, Zipline Reloaded, so that it stays up to date with like newest version of pandas and Python and all of that sort of stuff. But there's still like issues. There's still some issues. So when I ran the strategy, it didn't quite work, and I'm in dependency hell. Python dependency hell with it. But I think that I just got to find the right version of Python to use, and then like the strategy should work. So build a DOM plugin for Ninja, I'd buy that immediately. Oh man. That was so making an actual like fully fledged DOM for Ninja. You have no idea, man. So like there are some out there. Yeah, there should be demand. I don't know about that. Because like why would you buy my add in DOM for Ninja instead of just buying Jigsaw. Yeah, most trading floors are always involved in research from as far as trading is concerned, and that's where the programming language and platform come in. Yeah, I think so. Because you would sell it at a good price? Yeah, maybe. So the thing is with a component like that, so there are some like drop-in C# components out there that will let you do a data grid of that kind. But one, they can be very expensive. They can be very expensive to get and use in a way that would allow me to distribute it to you. And two, they aren't completely optimized for our use case. So I would probably end up making my own WPF element sort of a thing. And I have done that before, because this was the sort of thing that I did at Goldman. So I kind of know, it's a little vague now. I don't remember all of the details, but I'm sure that if I got into it, that it would just, I would completely remember. But it is a lot of work. It's a lot of work to get the component to work and everything. So I don't think that I would be able to put that together and really do that unless I was like really making money from it enough that I could just dedicate my whole time to that. You know what I mean? There is somebody out there, if you search for it, I'm sure you'd find it. There is somebody that has a free one that is on GitHub. You can see the code. So, I would go for that. I think that if we were going down that route, that it would be an entire platform. It would be an entire platform. And I keep saying I want to write it in Rust. The more that I've been diving into the Rust rabbit hole, the more I kind of question making GUIs in Rust and games in Rust. Is kind of this weird thing where like it seems like video games and desktop GUIs would be the thing that you would want to use Rust for, like really optimized desktop applications. But the whole memory safety thing requires you to do all of these things, and that makes like making a GUI framework, for instance, really hard to do. Like people are still kind of figuring out what the best mode is, and like the libraries aren't very mature, and basically the end result of it is that Rust is not very good for the very thing that the language should be good at, theoretically, because of the ecosystem and all of the difficulties with using it. So I don't know if Rust is actually the right way. If I did it with Rust, I would be able to like do all of the drawing code manually, and I would be able to use all sorts of fancy graphics stuff so that I could make really fancy, smooth charts with cool effects, maybe even. But I don't know if Rust is actually the right decision on that one. And there's other choices like C++, etc., etc. But I think the thing, if I made a platform that would be kind of like the killer feature of my platform, would be the ability to write your indicators and your robots in Python. Right? If there was a platform that had feature parity with NinjaTrader, but the programming was in Python, I think that would be huge. So how do you do that? Because there's this whole thing about like, okay, how do you integrate Python with this other framework? And there's these things where you can like compile Python down and make it fast, but there's, it's complicated. It's complicated. You're not going to make the whole platform in Python either. that would be slow. So I would like to make a platform, but there's some fuzziness around, is the technology really set up to be able to really do effectively what I want to do? Because I think a lot of the killer edge would be just the technology that it's using. Maybe the security side might be lacking in Rust. Yeah, I don't know. You can still make mistakes in Rust as well. And then on top of that, there's all of these other things. Like I've never really made a serious application in Rust. You know, it would probably, you know, so from that perspective, if I was going to really make a product and I was going to bootstrap it myself, it should probably be in C# because that's what I'm the most familiar with. At this point, I'm too familiar with C#. We're getting in, at my work, I'm very frequently doing all of this stuff with like how the garbage collector works and all this stuff. I keep running into this issue at work where people create large objects, and if an object is a certain size, instead of going on the regular heap, so C# has like 3 different levels of heap, and there's like this one heap that it goes in, and it goes through that a lot and cleans things up out of it a lot. And then if that object lasts, because maybe it's an object that you want to be there all the time, then you don't want the garbage compiler constantly checking to see if it needs to get rid of it. It doesn't need to check it as often, and that's extra processing. So it puts it into a different level, right? Well, if it's a large object, then it goes into this large object heap. And so you could have this large object that you don't really need, and it should be collected by the garbage collector, but because the large object heap doesn't get run very often, it doesn't get cleaned up, and so then you use way too much memory. Those are the sorts of issues I deal with at work. And then it's like, okay, somebody's creating a large byte array somewhere in the application. Where is it coming from? Right? So C# would be good. But you know what I'm saying? Like for me to make a platform, I think that it would have to be, that was my whole business. You know? Like I think I would need to, well, okay, so maybe one way that I could bootstrap it is taking out a small business loan, continuing to do my day job, and hiring somebody else to start it. That would be rough. And then who do you hire to do that? Like that, because that's a huge risk for them, right? And I would probably need to continue doing my day job because that's what would allow me to get the small business loan. Or split side, we create an affiliate program for the indicators. You guys start promoting it for me. You make some money every time that you successfully sell the indicator package. And we start pulling in enough money from that we're able to start development on a whole platform. And I think that if I did, there's a couple of little things there that are missing in the market and stuff. I think I could make a really killer platform. Really do. Does anyone in here have a channel to promote indicators on? Well, yeah, that's kind of interesting. Is like, then it would turn into, you would want to make your own YouTube and promote my indicators on your YouTube, perhaps. Yeah. I don't know. I don't know how you guys would promote it. Twitter? Yeah, we'll see. Doesn't Java have a similar problem with like the garbage collection and stuff? You know, I'm not that familiar with familiar enough with Java to know about that sort of thing in there, but there's all sorts of problems. I don't know how you'd promote it then otherwise, to be honest. Wait, you might be right. Maybe you're right in that if I make an affiliate program the amount of sales that it would generate is probably not that much. That the thing that would probably generate more sales is me just incessantly talking about my indicators every 5 seconds. This is this indicator, you really should have it. Look, the dollar index is on a pretty good trend up right now. We're seeing some dollar strength come through. All right, be right back. I'm gonna go find my foam roller. My back is I've got a subluxation that's bothering me. That did not take much. Hi Seth, what would be the best data feed for Jigsaw and NinjaTrader? Well, Christopher, probably the best data feed that you can get, or that works on both of them together. Let's see here. I forget what are all the different data feeds that you can get. Oh yeah, you can get. So the best data feed is probably the wrong question to ask, right? The best data feed, I think, is probably IQ feed. Like in terms of the quality of the data and all of that together, IQ feed is probably the best of the major data platforms. It's crazy expensive. Right, like you're probably not going to do IQ feed. Most retail traders don't do IQ feed. There's also Kinetic, but again, Kinetic really adds up. Kinetic is not terrible, but it's like $100. Actually, I don't think that Jigsaw uses Kinetic. You'd have to pipe it through NinjaTrader. So the vast majority of people that are using Jigsaw are using either CQG, which you can get. There's regular CQG, and then there's NinjaTrader's CQG Kinetic, okay, or Rhythmic, okay. I prefer Rhythmic because Rhythmic gives you more level 2 levels, right? Like I can see what the resting liquidity is, like 64 ticks away. Whereas with CQG, it's like much more limited. Like you can only see 10 or something like that. Okay. But CQG allows you to buy like the index components, like the tick index and the VIX index. So like if you're trading equities, you're trading equity indexes rather, like you're trading ES, you might want to look into CQG Kinetic and paying that extra for that data, because there is some interesting stuff that you can glean from that, right? So yeah, if you're doing Jigsaw and NinjaTrader, and then the other side of it is, because you're saying NinjaTrader, that's the other thing, right? Like you're probably just thinking about buying a platform, right? Well, if you're going to go into NinjaTrader and you're a new customer, they've basically made it so that if you're using NinjaTrader, you're going to want to do it on NinjaTrader brokerage. Okay, so So if you're going to do NinjaTrader, you're going to use NinjaTrader brokerage as your broker, then you're probably going to be using CQG Continuum, right? The alternative is like the weird setup that I have, which is I get Rhythmic through I get Rhythmic through EdgeClear. EdgeClear is my introducing broker. Rhythmic is my data. And the downside of that is that I have to use like the older version of NinjaTrader that isn't using the funky new logins and all of that stuff, because the new license does not give you access to Rhythmic. So that's kind of the way the cookie crumbles. Or that, or kinetic data, and spend $100 a month for it. I have a video about this. It's like CQG versus Rhythmic data, but I give you the gist of it. So the gist of it is, based on the platforms that you've selected, probably you're going to use CQG Continuum. Now the split side is, if you're only going to use Jigsaw, right? If you're only going to use Jigsaw, then just go to EdgeClear, you use Rhythmic data, and connect Jigsaw directly to the Rhythmic data. You can use the Jigsaw charts. They're just fine. You don't have all of the custom indicators that I think are really essential, but this is what it is. I've been working to try and get Jigsaw to include some of these features into their platform, like the spreads in particular, but I don't know. They're doing other stuff right now. I've written up a like a really good feature list for them, so if they ever decide to tackle it, they should know exactly what to do. But they haven't done it. Anyways, let's see. I missed some other. Oh yeah, Morgan was saying you need videos about passing platform evals using. Yeah. You know what? So when you have this is something about creating YouTube content and like influencers that I really, really hate. Okay, and that is that the corporations that are willing to spend money on advertising have a lot of power. So if I was still doing combines and I like aggressively pushed combines and like had an affiliate link up and all of those sorts of things and made videos about combines, the YouTube channel would probably get more viewers, because there are all of these platforms out there spending ad money to push combines. We call them combines. Prop firms. I mean, funded trader programs is what I call them. I don't think it's the same thing as a prop firm. Funded trader programs, right? And so you've seen that. So a lot of these guys that's like YouTube channels that like that's their focus, and they kind of blow up because of that. Especially if they're saying like, oh, I passed this combine and here's the money that I'm pulling from it, and that sort of a thing, right? But I don't like the combines. I think it's a waste. I think that it pushes you into strategies that are too aggressive and hurt you in the long run. And I think it's better to just trade super, super small on a personal account and or sim. It's totally fine to do sim too. Most people that trade futures, they lose everything. Okay, so just trade really risk adverse. I think that that's better for your development in the long run. And yeah, is the channel not as big because of that? Sure. But you know what? Like, we have content about Jigsaw, we have content about NinjaTrader, and there's people out there searching for that too. So it's all good. Oh, as Christopher says, I'm going to get EdgeClear Rhythmic. Well, there you go. Yeah, if you're just going to go the Jigsaw route, then just do EdgeClear and Rhythmic. That's the way I like that, or AMP. So this the other side is so EdgeClear are just like the guys that really know what they're doing. So like if there's a support problem, The person that you're talking to knows what they're doing. When you're getting set up, the person that you're talking to knows what they're doing. Versus AMP. AMP, I found that those people don't really know what's going on, but the commissions are cheaper. So that's the other one you have to think about. Question about prop firms. What if you trade a safe strategy with them but spend longer to get funded? Okay, so you could potentially do that, but there's two problems. Number one is that if it takes you like 3 months to pass it, then you have to pay their fee 3 times. And by that point, once you get to 3 or 4 months, you might as well, that is enough money to fund a basic futures account, right? Especially if you're going to trade micros. Okay, so I don't know if that one really makes sense from that side. But then the other side of it is that it's still, you have to realize how crazy the profit targets really are. Because when they say like, here's your drawdown and here's your profit target, okay? Like there's this one side of thinking about risk, which is like, what percentage of your overall account are you risking and all of these sorts of things. But another way you could think of it is just like, okay, what is my maximum drawdown? Once I reach that maximum drawdown, I can't trade the account anymore, right? That's the way that the combines work. And it's like $2,000 drawdown, and then the profit target is $3,000. So that is basically the equivalent of a $2,000 account. So you're have to make, 100% basically in a month or even in 3 months. Like even in a year, that's like crazy numbers, right? So that's why I'm saying the combines push you into strategies that are extreme risk-taking strategies. No, there's just no way around it. Versus, you can go and fund yourself, maybe make a $1,000 or $2,000 account, trade $10 at a time, right? And well, if you want to pay for all of the data fees and all that, you probably want a little bit more than that. But if you don't count the data fees, you could probably make $200 to $500 in a year, being really, really conservative and just $10 at a time on a $1,000 or $2,000 account. Okay, and that would still be like 30% for the year, and that's more than most hedge funds do, right? So it's really, when you put it from that perspective, it's really crazy the amount of risk that the prop firms are basically drawing everybody into. And that's why the failure rate is so high. So because everybody in the futures space, they're trying to achieve these metrics that are just insane. They think, oh, the prop firm, that is the level. That's like what I should be trading. That's what a professional trader would be. So even if I'm trading myself, I want to be able to hit their numbers. I don't want to have a loss more than this, and I want to make this much. And no, those numbers are crazy. Like, just ignore them. Start completely from scratch. Don't lose. Here would be the metric that I would look for. Don't lose more than 1% of your account in a day. If your max loss can be 1%, that should be pretty sustainable trading. Well, I don't know if the fund... Well, okay, so obviously, if you do pass the combine and you make money from it, you're trading such a risky, aggressive strategy that you are going to pull in a lot of money from it until you crash and burn. That's the thing. The vast majority of people that do get funded blow the account within 3 months. So I suppose one thing that you could do is you could do the risky strategies and everything, get funded, and then shift back into a very, very risk-adverse strategy. But then that comes back to, why not just fund yourself? Or if you're doing that, you go in, you get the payout, and then you switch over. Like this is the thing that like boggles my mind, is there's some of these people that have been able to pull tens of thousands of dollars out of these combine accounts, and I'm like, okay, and you didn't just go and start your own account at that point? Because you will make more for your own account. That kind of makes me skeptical as to like, I think that a lot of these people that, they're trying to push the affiliate link, they have their own affiliate link, or, does that sort of a thing where they're not actually making money from it the way that you think that they are. Yeah. Copy trading. Yeah. Because if they were really that great at trading, then they would just switch over to making their own account. But if they know that they get funded and then blow it all every 3 months anyways, well, if that's your own account, you've like lost that account. Whereas on the combines, he didn't really actually lose as much. There's a big mental aspect to trading your own money versus a program. You say so. The argument for going super risky, get funded, and then go super safe is maybe because since you have the more buying power, you'd make more potentially. Yeah, there would be a certain threshold where it's like, I don't have enough money to fund myself. So, I would want to do the funded trader program and it would be better for me. But that would only be true in as much as, once I've pulled enough money to fund the size of an account that I would want, then it would make sense for you to go and just make your own account at that point, wouldn't it? But that's not what people do. Have you ever built any ensemble strategies using masters? I am not familiar with the master slave function in NinjaTrader 8. What are you talking about? Is that actually a thing? Like if I search master slave function NinjaTrader, will it pull up results? All I get when I search for that is stuff about copy traders. Make 200 a day using one NQ. Yeah. Also, like the thing that I find that is the most common is that people will take on a huge amounts of risk for relatively mild amounts. Like, I will risk, like the equivalent of it on the treasuries here would be, I want to make 4 ticks and I'm willing to risk 8 to 16 ticks to get it. Okay, well, if you're trying to make 4 ticks and it goes 4 ticks against you, you're probably screwed up, right? But then that means that your win rate's going to be super, super high, right? And you should be able to do that, get one trade that comes through, and if I was doing four ticks will give me, what, $62, right? And then I can trade like 3 contracts, and that would get you to like the $200 a day that a lot of people are looking for, right? The problem is that when you get those 8 ticks against you, right, you've lost way more than that. You've lost almost $500. Right? So like they appear to work on a short time frame, and they if you're really good at it, you can even go a couple of years before it just blows up. But like almost always it blows up, because where the profits are really coming from is you're taking on the risk. Like the chances of you being able to get the treasury to move 4 ticks in your favor are really, really high. Right? You have to have really misread the market to get that one wrong. But the market will come where it will just do that to you over and over and over again. I guarantee it. Always does.
Block buy.
So that's what's happening. There's all of these people that you see on social media. Like why is it the survival rate for futures trading is like 95% of traders lose, but then when you go onto forums or onto Reddit, there's all of these people just abundant saying that they're making $200 a day. Sorry to pick on you, but $200 a day, it's really, really common. They say, they're all over the place. Oh, I make $200 a day, or I'm doing the combine and I've pulled tens of thousands of dollars out. Like, they're everywhere, right? Where is that coming from? I'll tell you where it's coming from. They're only talking about their profits and they're not telling you about their losses. They will have runs and they will go like 2 years and make money, and then all of a sudden one day just blow the account. And guys, if you win every day for 2 years and then at the end of the 2 years you blow it all in one day, you know what you just did? You wasted 2 years. The human brain wants to go, oh, well, the strategy was working, but I just kind of made that one mistake, and then you go back into it, right? And they don't tell anybody that they had that loser. They just say, well, I'm still a profitable trader, and they just go back and do it. But that's how you get that. That's how you get the metrics that you do. That's how you get the metrics that you do, is that they blow it. They'll have periods of profitability, and that's when they go on the forums and brag, and then they don't tell anybody when they lose. Well, I'm getting a lot of clicky from the S&P 500. I'm kind of wondering if I should change things to filter that out. I think I will. Just enough to filter that out. You know, I don't really get very many from the treasuries, by the way. 1,000. Should be able to see that, but haven't been getting them lately. To be honest, I know some people like that, and I can assure you they can't even go 2 weeks being... That's funny. Oh. I use it in the code to build strategies that only trade when other systems are in a trade. That's interesting. Well, I have built some strategies that were basically like, here's a bunch of different signals that I've had some success with in backtesting, and then combine them together into a voting system. And I did have some success with that, actually. I was able to get it to over a 5-year time period, a profitable strategy, but I think that it wasn't high enough. I think one of my issues is that maybe I'm just too picky. Like maybe there have been a lot of automated strategies I've built that would be perfectly sufficient, and I'm just like, well, because it doesn't have a Sharpe ratio over 1, which is really, like, a Sharpe ratio over 1 is really, really good, right? But, you know, it's like, it's not making enough, it's not worth trading. When you could trade it, you might as well just trade it. Which one was that, by the way? Should we go and pull that up now that I'm thinking about it? Are we done with our playlist? Really? Close that, by the way. I can close that. And I think that's all that I can close. All right. Question of the day. How do you feel about the Texas Stock Exchange opening up that will directly compete with the NYSE/NASDAQ? So it looks like they're doing a real exchange. I don't know what else to say about it. I don't expect it to be a huge deal. I mean, there's multiple exchanges already, so trading in billions of dollars in investment banking is different for sure. Okay, what was the name of it? Well, now I don't even remember. Oh, did I make it as a CTA one for some reason? Okay. Oh, here it is, vote strategy. Yeah, here it is right here. Okay. I was hoping that I already have one out there. Okay, so this goes back to 2016. So it's more than 5 years. A profit after more than 5 years. And on ZN, by the way. Now, let me change it to ticks. Oh, I do have it on ticks. Okay. So my average winning trade versus my average losing trade is really big. My average winning trade is 151 ticks. Really? Wait, what is my limits? My stop is 96. Oh my gosh. Yes. Okay, that's why I didn't do it. Right. Oh, that's why. Oh, that's so very interesting. Wait, is the other one the same? There's this one that was slightly better. No. I don't know how I feel about that one, folks. That's not actually a good strategy. But I'm basically, I've got like what? CCI, R2, an SMA. I've got like a bunch of different things all together, and it trades based on like a fuzzy vote system. But apparently none of those individual things are good enough. Now, I did it as like, I think I initially intended it to be a daily strategy. No. Let's see here, just run it. And that will probably... No. That didn't work. Didn't take any trades. And also, I don't know what's with that. I might have changed it when it was like a daily strategy, and then I changed some things, and it really only works on minute bars, perhaps. Ensemble strategies help reduce overfitting? Maybe. But that's not really what I was getting at with it. The thing that I was kind of getting at with it was like, okay, you have one indicator, and you say, well, it works really well when you do X thing. Like if I have a really strict criteria, it only takes a trade when it's really getting to a certain extreme, then I can actually get a really high win rate with it. But it doesn't take very many trades. And so, one, there's not enough trades for me to verify that, you know, how it actually behaves, like the fat tails. So not enough trades to see the fat tails. And there's not enough trades to really make money in to make it worth trading. So what do? I combine it with a bunch of other different trades, other strategies, and kind of vote and make it fuzzy. And then I'm able to have, theoretically, relatively high win rate while still taking a lot of trades. But I don't think it actually worked out that way. Well, there were some where I was getting pretty high win rates. I mean, I am getting win rates over 50%, so it wasn't terrible. It's too bad on our old machine I had such a long history, but like so many of these are actually like not worth it and shouldn't be saved. When were we doing this 4-year trend one? That was the day before the 4th of July. Oh, yes. This is the one that is kind of like the oscillations in the market sort of thing. Yeah. And I was having a bit of trouble with it too. I think I'm okay with clearing it. Remove all non-pinned. See, some of these ones, so they'll like this one with the rock volatility strategy, for instance. I found that incredibly encouraging. And I haven't done, because really what we need to do is we need to get into the, well, maybe we should, maybe I can do it today. Seeing if I can backtest my my tick replay. They have a market order imbalance going. I don't think I want to pull it up here. Or pull up some of the old strategies from the other computer. Because, so the reason I was testing the 4-year trend was because that was the one that was like, oh, this would really benefit from the news thing. Or it could just do the news strategy. Where's the news strategy? Advanced Visa strategy. Only takes one trade. ZN. Stop. Reward factor 1. Oh, it's the dailies. Let's do it. Change it to 1 minute data. Mm-hmm. 2,000 trades. 49.77%. It's doing what it's supposed to do. Seth, I remember you worked in this, yeah, on the technology side. Yeah, I might have a noob question for you. Nope, no noob questions. So if any time that you put an introductory statement before a question, I'm always going to tell you to not ask it. Right? But you should always just ask the question. Don't say, well, you know, this might be a dumb question, but you have time to answer. No, just ask the question. The question should be in the first message. That saves us all time because you see now here I'm talking about it like what? It's been 30 seconds. You could have already asked. I could already be 30 seconds into answering your question. Okay, what was that? Block by. At 15, huh? Let's keep an eye on this for a second. Let's forget about the backtesting thing for a second. Okay. That might be significant, it being an auction day, right? Oh, he's still, Francesco, are you still writing the question or are you going to ask it? I probably dissuaded him. Like, okay, you know what? You're right. I shouldn't ask the question. Okay, I have some time between now and August, and I wanted to start learning Python because I want to start building a few tools with options data. So yeah, there's so much stuff out there to learn Python with. I don't know, just start searching for tutorials. So, what is his name? The guy that wrote, here, let me show you the book. It's called Trading Evolved, but I can't. Where did I have it? Seem to have lost it. Well, I don't know where I put it, but the book is called Trading Evolved, and he basically shows you how to program strategies in Python, and he takes it from a very, very simple level. Like he's taking it from you don't know anything about programming or Python. So if you want a beginner program, I would go and just get that book. How come you do not have much buyers and sellers on your Jigsaw DOM? Which one are you talking about? Yeah, liquidity looks pretty normal to me. I asked ChatGPT to... You know what? Don't listen to ChatGPT. He's full of shit. That guy. Just finished processing 10 gigabytes of data to build the historical skew graphs. Ooh. By the way, that reminds me, I need to check something real quick. Just gonna take care of one little thing here real quick. Treasuries have, they did have a pretty good downtrend to get here, but there does look like there's a buyer right here. There might be somebody kind of putting in a rate lock at 15. So okay. It's funny earlier, Uzi was saying, oh man, Jigsaw's sent me a lot of promotion emails lately, and he sent another one this morning. Apparently they extended the 4th of July sale and put coupons. There were some coupons had problems. Cool. Man Meat, welcome back. How are you? Okay, are we getting news here that I missed? Wholesale inventories? Well, okay. I did know about wholesale inventories, but they're just, the liquidity usually doesn't pull that strongly for wholesale inventories, does it? Have you ever looked / traded corn futures? Well, I've definitely looked at them, but I've never traded them. I do believe that corn would be a really good market to get involved in. But as with any commodity or any market that if you're gonna specialize in that market, you really got to know that market, right? Like, what are the things that affect growing corn? What is that industry like? Like, you want to have like industry inside insights, right? So like, if my family ran a farm and we grew corn, then I think that I would probably be very capable to trade corn, for instance. Or maybe I need to go and start a corn farm so I can start trading corn. You know what I mean? But I don't have any of that kind of experience. I think that the easiest place to kind of develop that background knowledge of a market is in the treasury market, because it's so important. There's so much information out there about interest rates and what's going on. Okay, that's probably the easiest place to develop it. You're going to do it in something like, I think that the other the commodities that I've looked at that I think would be best to trade would be corn, copper, and oil. So, but how do you get like the inside information on those particular commodities? I don't know. I used to pit trade corn back in the day, it says Robert. Well, there you go. We have somebody. Maybe he can teach us. I've always wondered, like if I'm going to trade copper or corn, like, surely there's like some sort of a news service out there I can get, or a research service that gives me information about the corn market to help my trading. You know what I mean? I've just never found those. They've got to be out there. Soybeans. Oh, there you go. Soybeans is another one. My understanding, though, is that corn is a thicker market, and I prefer a thick market. I find models and information simpler for corn than crude oil. Oh, I bet. Oil is a really complicated commodity to trade. Like honestly, well, okay. So the big account killers are CL and NQ. So like they're kind of like neck and neck for which one is the widowmaker. I think, though, that NQ is really the widowmaker. More retail traders blow accounts on NQ than anything else, by a long shot. I mean, by a long shot. It's insane, right? So does that make NQ the hardest to trade? Well, I think that a lot of the problem with an index is that there's just so much going on in an index, because, there's all of these individual stocks, and they're all moving individually. And then there's things that affect the whole stock market as a whole. And then there's all of the correlations between the stock market as a whole and interest rates and currencies. And, so there's that whole mess to run out. But basically the gist of it is that like the short-term movement, especially in something like NQ that is so illiquid, is really incredibly random. And so it's difficult to trade because it's incredibly random. But oil is difficult to trade because there's just a lot to know about the oil market that you're not going to know unless you specialize in oil. And so I think from that perspective, oil may be the most sophisticated commodity to trade. I'm Brown of you. No, that will be after the stream. So in an hour. So we'll end this at 5 minutes before the top of the hour, and then we'll be over on the Ninja Trader live stream. I guess maybe I want to move this over to here. I wish Jigsaw had a demo trial. Me too. You know what, man? Me too. But the way that they've decided to do it is you buy the program and you have a money back guarantee for like 3 months or something like that. So you buy it, and then if you decide you don't like it, you get it returned. And a lot of people do use that. I'm actually surprised that because if somebody buys Jigsaw with my affiliate link and then later they decide they don't want it and they go back, right? Or it's not worth it to them for whatever reason. I'm sure there'd be lots of reasons that they do it, but I see it. I can see it, and there is a decent number of people that do that. Oh no, they totally abide by that. Like you send them and you get your money back. No questions asked, basically. And like the number of people that do treat it like just a demo is, I'd say maybe like 30% or something like that. So I don't know if I have that much data to go by though. I don't know. It's getting more and more every month. But okay, how much depth do you get in the dump? That is entirely up to your data provider. So if you are using Rhythmic, they give you all levels. So if I changed it to like 100, you'd be able to see 100. Now that's like more processing power and everything. So I only go like, is that I think I'm going 32, something like that. I think usually you want to see just a little bit beyond what CQG wants, what lets you have, unfortunately. It's the way it works, but like I want to be able to see, like there's that big order at 13 that I find a little curious. Why would it be at 13? It's not at the low of the day or any of that. Was there a low overnight at 13? No. $110, 13. No, hard to know. That does appear to be about where the seller cost basis is. But anyways, that's curious to me. And then you don't see another large one. Maybe there's one at 110, and that's just beyond where I have my settings to show you. DTNIQ has webinars on corn. Oh, okay. I just would really like to get more research on agricultural markets and metal markets too. But like on Zero Hedge, you will get pretty good articles from time to time, like going into research from Goldman that says, what expected flows are to be based on the history and all of this sort of stuff, right? But, you never get that kind of information for corn, right? I never see this is what the forecast is for how much corn is going to be produced this year and all of those sorts of things, right? USDA releases statements about agriculture and they are strictly a data collection organization. Okay. So the USDA was one source. I don't know if it really matters. Like, I don't see myself trying to trade corn anytime soon. But I would still like to be able to know so that I could, like, give that information to people. Maybe make a video about it. That sort of a thing, right? I don't know. If you have more stuff with those kind of more commodity markets, you know, send them to me on Discord. Because, you know, that could always be a future video, perhaps. Next event in Biden's dementia decathlon solo press conference Thursday could seal his fate. Well, that's where we're at with that one, huh? Uh-oh. Unusual options activity spotted on GameStop again. Interesting. I didn't see anything about that on Reddit. Let's just go and check the chart. Well, here's Chewy. Nothing interesting. GameStop. Yeah. There is a little pop there today. I don't think it gets real until 26, but that could be something. But can they really spark the same kind of mania that we had over here from all of that? No, that was just on Zero Hedge. Actually, they posted that like 2 hours ago, just before we started the stream, and I missed it. Well, the Chewy looked like it wasn't doing anything. Let's go back to that one. Oh no, I guess there was some degree of, you know, let's go crazy, but nothing too cool. Nothing too great. While we're at it, let's check out my some of my favorite stocks that I've been keeping an eye on. Okay. So there was this rise right here. I was like, okay. And it's come back. So if it comes back, I might add some more, but these guys and many other unusual options activity services get stuff wrong all the time when it comes to indexes. They have no idea how orders are handled in the pits. Oh, okay. I think that there's just this whole thing that, you know, assumption in the trading world that if there's a large trade or something, that means that somebody else knows something, and so I should buy too. And I think that kind of more from a philosophical standpoint, that's not trading. Like, just trying to watch and follow somebody else is not trading. That's just following. And but from a more empirical approach, we know that all orders move the market regardless of whether there's informational content behind them. So you don't know if they know something or not. You know, like this, I think that that's kind of what people maybe hopefully learned from the last GameStop saga, right? Did Roaring Kitty know something? No, he did not. He didn't know anything. He was just making a degenerate options bet, and because everybody followed behind him, he was able to, you know, get out of it without too much damage being done, because these retail traders all just follow him. But he didn't know anything. That's why I think that live stream hurt so much, was that everybody went, oh, he doesn't actually know anything. I love how he exercises his options. Well, I don't think that we actually know that he did that. There was kind of all of this stuff that was like, you know, maybe we could figure, but then it was done. And so I don't think that there's any way for us to know from the data that's available to us. Maybe there is some data that I'm unaware of that came out that will show like options were executed. But I don't know if he executed the options or if he just sold them and then turned around and bought the stock. But I'm also not sure if he's still in his position. There's been enough activity since then that he may have gotten out of his GameStop position, and what we're seeing right now may be him jumping back into it. I don't know. Smartest thing he could have done was rolling his calls. What do you mean by that? Yeah, if he executed them, you're right. It is a gift to market makers because there's still some time value left in them that you're giving up. So the smart thing would have been to sell them and then buy the shares. But you know what? From some of the things that he said, I'm not even sure if he really understands the options that well either. So maybe it is the case that he executed them not knowing that he would have made more money by selling and then turning around and buying. Sell the ones he had, buy more at the money, and put market makers in negative gamma again and force them to buy delta. Oh, yeah. I don't know. I think that at the time that he was doing all of that stuff, that he was kind of starting to panic a little bit. Like what I saw was it popped big time. He didn't sell, and then it was getting back to his break-even point. And if he did indeed sell where I think if he did indeed sell and he sold where I think he did, then he might have lost a little bit on the overall trade. And so I think that, you know, what can I do to like reignite this again and all of that? I think that was not on his mind. What he was like, how do I get out of this? Oh, I've got myself in a real pickle. How do I deal with this now? Right? It's like I may just be what is this word? I may just be projecting because this is what I would do and this is what I think about. But it kind of seems to me that he's exploring and realizing the impact of his trades and trying to sort out how to deal with that. Because it was not something that he ever had to think about before. Almost all of the stuff that you see out there about GameStop is kind of based on this idea that no matter what retail traders do, they can't move it. That the retail traders have zero impact on the stock. When the reality is that like retail traders are the only reason it's moving. He seemed oblivious of all the hype for nothing. Yeah. On the live stream, he seemed oblivious to me. Like I don't think he knows how the order book works. I think that his knowledge was all on the kind of, pull out a spreadsheet and do analytics on the spreadsheet side. If ES is the index of 500 companies, why are we looking on the order flow coming in ES? We have to see the order flow of those companies that actually move ES. Okay, it's a good question. Actually, traders profit. It's a good question. So, I think the flaw in that logic is you're still thinking about there's informational content out there, and I'm watching the order flow for this informational content that is going to tip me off to something else, right? So why do we care about order flow? Why do we watch order flow? In order for an instrument to move, it moves because of orders, right? In order for price to tick, here we have the treasuries. In order for price to tick up and the best bid becomes 17 and the best offer to become 17.5, right now there are 3,500 limit orders in the way, and you would have to buy through those 3,000 limit orders. Now, if I start buying, maybe they pull, and maybe it actually only takes 300, 500 contracts to be able to make it tick up. Maybe there's an iceberg there, and it takes like 10,000 contracts to tick up. Okay. Well, so what would be some of the situations that might cause those sorts of things? Okay. Well, for one thing, if the Japanese yen started buying, which by the way, they kind of turned there. It does look like the Japanese yen may be pivoting. So if the Japanese yen ticks up, you might see the 10-year treasury also tick up because they're correlated assets. And these robots are like watching the two of them and are arbitraging between the two, right? So the robots that have limit orders at 17, they might say, oh, this 17 is no longer the best price. So I am going to shift my orders to 17.5, or they already have orders at 17.5. So they just cancel their orders at 17. And then you would see it do that thing where it ticks up on like less than, 300, 500 contracts. Okay. So that wasn't like people actively coming in, trading and pushing through the liquidity and everything. That is just the robots adjusting their best bids and offers and the market being able to move on very little volume because they're trading a correlation or something like that, right? But in order for that to move, you would have to have those orders cancel and then the rest of the orders taken out by market orders and we tick up, right? So we care about the orders because the orders are what actually moves the market. Now, in order to make a good trade, we have to be able to predict orders, essentially. So we have to know something that is going to predict those future orders are going to come through. And I think that a lot of people come through with this idea that like, okay, well, I'm going to see like a really big market order, and that's going to be a good sign that more market buy orders are on the way and that we're going to move up. Right. And that's the sort of like the retail trader way of thinking. Okay. But the way that we want to think is orders move markets. What do we know that can potentially predict future orders? Now, in order to know what things kind of predict future orders, we kind of have to watch it, right? We have to say, okay, here's a piece of news. This is what that news was. And here's what the orders were off of that. Not just the market orders. You need to look at all the orders. But here's the orders off of that. And then, your mind is like this machine learning network that takes all of that information and creates this neural pathway to analyze all of this information in ways that like we don't even understand, right? Okay, so on the S&P 500, there's all of these individual constituents, right? But even though there's all of those individual constituents, in order for the S&P 500 to move up or to move down, it still all comes down to the orders. It still all comes down to the orders. And I want to watch and see, okay, did we move up on not a whole lot of volume, for instance? And that could maybe tell me some things. Maybe the S&P 500 explodes higher from here because of some major, like one of those top stocks like Nvidia or Apple says something that is big enough to move the overall index higher, right? And then I can look over here on the futures and I can see, okay, so what orders came through from that? Well, it's a complicated thing to sort out in the S&P 500 because it is a derivative. So the people that are trading the index futures are going to be different from the people that are trading the individual stocks. And you will see differences between those flows, and that can tell you certain things about it. It's like, okay, like what if we're not going anywhere, but I'm seeing like really heavy selling in the treasury, in the futures. Okay, the people in the futures, which are mostly hedgers, they're selling for some reason. What might that be? And maybe that would tell us certain things that might be able to predict future orders from there, right? And so whatever it is that you are trading, you want to look at the orders. And it's not like, oh, well, if there's other places to trade it, that information becomes useless, because we're not necessarily, trying to follow somebody else and find some little secret piece of information hidden in there that's going to tell us the next move. Really, it's kind of more, I have my own ideas about what the flows are going to be, and I'm using the orders that I'm seeing here to kind of train my mind as to those things that move markets and to confirm what I'm seeing, right? If I think that a certain thing is going to happen, like today in the 10-year, there's an auction. So if there's an auction and I think that we're going to see the flows based on the auction, I'm going to be looking for like rate locks. I'm looking for absorption at certain places. And it's going to be relatively tight. And that's what we saw. It was relatively tight. We came down to 15. There was like a big market order that came through in there. And since then we've backed off. Probably a rate lock because of the auction, right? That's the thing. The auction predicts orders. Then I saw the orders come in here. On another day, I might have taken a long there. Today, well, I guess I could have made 4 ticks off of it. Maybe I should have taken it. But in the summer, I'm kind of like, I don't need the stress. We'll just, save the accounts and all of the risk taking for later in the year, because in the fall, I think things should really heat up. Okay. Anyways, first time I get a good answer for this question. Oh, well, I'm glad, because this question gets asked a lot, and it's one that kind of, I'm working on my messaging, the way that I explain it, trying to come up with the best way of explaining it, because I think it is something that people have a difficult time with. But at the end of the day, it really comes down to the reason why people see that as a conundrum is because they think that we are looking for some sort of secret signal that's going to tell us what the next move is going to be, when what we're doing is actually a lot more complicated than that. This is usually the way this question is asked is, well, there's dark pools out there, so why should looking at this mean anything if there's information going on in dark pools? Well, if there's a transaction happens in a dark pool, guess what? The person that they sold that to on the dark pool, what are they going to do? They're going to turn around and sell it on the open market. So you see the flows come through one way or another, right? But, the larger thing, though, is if you are going to trade equity indexes, the fact that there are so many individual stocks does make it a more complicated thing than other instruments. So you have to factor that in. And let's see here. So going back, Francesco, I have friends who work in finance, and everyone in Bloomberg chats was linking the stream and talking about it. Oh, you're talking about the Roaring Kitty thing? Well, yeah. They expected who knows what. Well, we got on the chat in Discord. We don't actually use the chat on our Discord server very often. But we did, and it was a really great thing. And watching it, yeah, it really was kind of weird, because it was like, I don't know what people were expecting, but like price really collapsed while he was talking. I think that there were a lot of people that like thought that he was going to say or do something that was going to lead to another pop in it. And then when it didn't happen, they bailed. It was just weird. Now to the other issue that we were talking about, in the underlying stock have an impact on the index and vice versa. There's arbitrage constraints that tie everything together. Imbalance in order flow is the key. You can sell all the ES you want. If there's billions and billions being poured into the Magnificent Seven and the likes, the index is going up. Yeah. Yeah. In the end, the order flows that you're going to see in the ES should match what you're seeing in the individual stocks pretty closely. But there will be divergences, and those divergences might tell you certain things. I don't think that I'm very good at that when it comes to the S&P 500 futures. You know, I don't think I understand as well what are the things that will cause people to hedge with indexes and stuff, but I digress. Okay, man meat. Does anyone ever notice the really big orders 2.5 points above and below the trading price that follow it? Okay, so I saw a thread about that on Reddit the other day, but I thought that was kind of weird because you should always see a little bit of liquidity, you know, a few points out. Like, I have a consolidated DOM, but you can see right there and there, there's big orders. So generally speaking, what those are is robots that are automatically adjusting their bids and offers. And they really only want to get filled when there is like a limit move. Like some piece of news comes out or something like that, and it pops through and comes back really quick. And that's what those guys are about. Otherwise, I think generally speaking, you can ignore it unless something happens, like you're ticking up and it stays there. That's kind of interesting then, right? But generally speaking, what you should see in terms of liquidity is the liquidity should be lowest at the current price, and then it gets larger a little bit further out, and then, you know, the interest wanes very slowly as you get out. This we draw this diagram all the time, and everybody says that it looks like something sexy, and I'm kind of like, well, I don't know what you're into, but you will see this in the liquidity all the time. And this right here is kind of the liquidity hole. If this gets too low, if it gets like that, then it can make it very, very difficult for us to climb out of this, right? That's when price will just go sideways for 45 minutes and do nothing. So yes, it is a behavior that you should typically see. There's not a whole lot that you can gain from it, though, unfortunately. But there is a lot that you can gain from kind of understanding why it's like that overall, right? Talking about market impact, how much was it that $1 increases the impact of the market? Yeah. So if you take $1 out of fixed income and put it into the stock market, it changes the overall market cap of the stock market by $5 to $8. So the impact of individual trades is actually very strong. Like basically what it ends up being is like most retail traders, they're not trading enough to move markets. When you get into big guys, they can move markets. But like institutions, basically even the smallest institutions will move market and have to factor it into their trading. And it moves way more than any of those institutions would like. So the you know, because of where we're at as retail traders, we're trading one lot, and of course it's not going to, you know, have very much measurable impact. Okay, but the impact of new orders is actually very extreme and is the primary reason why markets move the way that they do. All of these, you know, technical analysis theories that people have are based on the idea that like the market is efficient and it's extremely difficult to move it away. Right? And that's why so many of their theories and ideas about things are just so dead wrong. Whereas what we've learned from the order flow view of markets really explains some of the mysteries that have puzzled people for hundreds of years, actually. When dark pool is executed, does it still show in a tick stream, or is it also hidden from there? So trades that happen on dark pools are reported at the end of the day. But generally speaking, So let me explain to you what a dark pool is really for. Okay, because everybody seems to think that dark pools are there to hide stuff from us. That's really not what it's about. So again, orders really move the market. Even the smallest institutions will move the market, and it's a big problem for them. And so a lot of effort is put into reducing your impact on the markets. And there's ways that they do that. And there are some outfits out there, like the block trading desks at Goldman and JP Morgan, that are very, very good at doing it, executing and reducing their impact as much as is possible. So if you're a small institution, you're not an expert in that. You will ask somebody else to do it for you. You go to the block trading desk at Goldman or JP Morgan and you say, hey, we want to execute this trade. And they say, okay, well, we think it would move the market this much. So this is the price that we will quote for you so that we can still make a little bit of profit. And then they say, okay. And if that happens, then they do the block trade. And then the block trading firm goes to the market and buys or sells the thing, right? What a dark pool is about is allowing that whole process to happen without having to call somebody on the phone. They just want to be able to go to a market and say, what if I were to buy X thousand shares right now? What price would you give me? And then, if there's a hit and they get the price and they're okay with it, and then it gets transacted. And what typically happens is they're matching up against a block trading firm. One of those guys that is an expert in execution. So they'll trade it with the block trading firm, and then the block trading firm will turn around and sell it on the actual market. So you will see, if you could see the transactions on the dark pool, you could front run them turning around and selling it on the market for sure, right? But it does come into the market. It does come into the market, and you'll see it as a large meta order. So the volume makes it there one way or another. That is a bit similar to database queue. How does this relate to VWAP? Well, okay, so with VWAP, one of the ways of executing to reduce your impact on the market was to adjust whether how much you were buying or selling based on where it was relative to the VWAP. And this is a VWAP strategy, basically. I forget what they call it. But they have found that if they just reduce their impact to the order book, basically they push the order book until the liquidity starts to be strained, and then they back off, execute more slowly in that area for 45 minutes, and then push it again. That is better than the VWAP strategy. So the VWAP strategy is a little bit antiquated, but the market does still kind of react to those levels, and behavior above and below the VWAP does change. But, I think retail traders have this idea. I just put a VWAP on my chart and do some technical setup based off the VWAP. I should be able to find profitability. No, probably not. That's old news. You're talking about stuff from the 80s and 90s. Can you fade extreme tick levels on the S&P cash by using the ES? I don't know. Well, so I will tell you that we did a little bit of back testing with the tick index, and it did seem to be really good at telling you pivot points and stuff. But when I back tested it, that still just only brought shit to break even. So it looks like that there is some advantage in there, but that somebody's already taken it out of the market. I don't know if that really answered your question, but that's what I think of when you say that. Let's see, I've traded for 4 years, but lack consistently. See, frustrated by options and uncertainties in market choice sessions, trading styles, and tools like thumb and charts. I'm struggling to find my path. Well, so what you should do, Traders Profit, is I have a video series on my channel page here on YouTube. That's like an order flow video series, and there's like 5 or 6 videos in that series, and just watch all of those and pay close attention. So the first few videos are just like, what is a DOM? What are you looking at? Right? The last few videos go into empirically proven behaviors in the markets and why the markets behave that way. And once you understand that, and I've kind of already been covering it, but once you understand the impact of orders, the strong impact that they have, why things are so difficult, it all just makes sense. Why everything is so difficult, why the retail trading community makes the mistakes that it does, etc. And it's not necessarily going to solve the problem for you. Like, it's not like you're going to read that or watch that video and then be like, okay, now I'm ready to trade and I'm going to trade and you'll be profitable. But you will at least understand what's going on, right? At that point, you understand enough of why the market is doing what it's doing to stand a chance. So even though you might not be able to catch the moves, at least you're not constantly bewildered and clueless, right? You're actually seeing the game that's being played. So at that, where you're at, that's what I recommend. Francesco, just stay off the Morgan Stanley desk if you don't want. Yeah. So what he's talking about is that there was a scandal where the Morgan Stanley desk was apparently tipping certain favored block trading firms to some of their large transactions that they were going to be doing. Basically, their block trading desk had a leak. Thank you so much for all this time you give us. A lot of people don't realize to get a response from an extremely professional trader. Well, I don't know how extremely professional I am, but we have been doing this for a long time, and I feel that I've gotten pretty good at addressing these kinds of questions. Like, this is what I'm here for, right? It's a small, intimate stream. You can all ask a question and you'll get an answer for it, and you can get an answer that is like, based on real knowledge and things that we can prove about the market, rather than just some crazy guy's theory that the market's out to get you, right? Just what you get everywhere else. Do you think CPI will lead to some volatility? Oh yeah, Tony. CPI tomorrow was an S-tier event. I will not be trading the event itself. There might be, 5 to 30 minutes afterwards, I might see an opportunity and take one, but like the immediate aftermath of that one is probably going to be too volatile for my likes. If it comes in hot, the market's really, really going to not like that. But I think that the most likely scenario with the CPI is that it comes in line with the expectations and very similar to the way that the last CPI did, and just gives the market even more confidence that the Federal Reserve will cut in August, if not July. Maybe it's too late for July now, but I noticed that there are two types of traders: some that trade using value and VWAP and balanced, not balanced, and cumulative delta, and there's some who trade using supply and demand. Yeah. Well, so yeah, and this is all kind of based off of this fundamental idea that is wrong, which is that the market is efficient, right? Like when you get supply and demand, you say supply and demand, but what you really mean is support and resistance, right? Sometimes we use them interchangeably. So what is support and resistance based on? It's based on the idea that there's some magical price in there that the market actually deems appropriate. And when the price gets too far away from that appropriate level, that it will get forced back into that level. And so if I watch a chart and see where it's been bouncing before, I can see what those levels are that, it's gotten too far, right? But what do we know? What we know is that the reason the market moves is because of orders. So if you can predict future orders, you can predict the moves and you can make money. Most of the time when you're seeing a range like that develop, it's because of a correlation, right? There's a correlation and there's a point at which it would get far enough away that arbitrage will come in and push them back into, they call these co-integrated. This is kind of a little bit more what causes it, but I don't want to take a trade unless I know something that is going to predict future orders. And I know that if there are enough orders, that it's going to blow through that level. And it doesn't matter what that level or how many times it bounced or whatever. What matters is the future orders that are going to come through. And the only way that I can know that it's going to break through that support or resistance line or not is if I know what the future orders are going to be. If I have a prediction of the future orders. Right? And it's the same sort of things with like VWAP and cumulative delta, right? Like cumulative delta, the interesting one is like, okay, so cumulative delta has been moving up for quite some time, but the S&P 500 is going sideways, if not down. So there's a divergence. What does that mean? Does that mean that the index is going to catch up? Well, it could, but it could also mean that the cumulative delta is going to turn around and start selling now, right? So these sorts of technical things, they're interesting. They're worth learning about and studying, but they're not really predictive. What's predictive? The future orders. So what is predictive of future orders? Well, CPI. If you know what the CPI number is going to be, you can predict future orders. I predict that it will come in line. So my bet would be buy it today and CPI will be in line, if not soft, and the treasuries will rally off of it. That would be my prediction. Now that one is way more speculative than I would like to make for a live trade. But that's kind of what we're doing, is we're using the information that we know about the market. I know enough about the economic data and that particular piece of data in particular to make a pretty good estimate of what it's going to be. And then if I know what that number is going to be, I can predict what those flows are going to be. And I can predict how much it will actually move. And I think that you're going to see a 30 to 60K change in cumulative delta after the CPIs is probably what I'd look for. Right? That's a pretty specific prediction about the flows based on the informational inefficiencies that I have over the rest of the market, right? Or informational advantages that I might have over the rest of the market, or at least over other retail traders, right? I know. No, I already addressed that one. Man, you guys asked a lot of questions there. It's almost time for me to get going. I should probably end a little bit earlier than normal to make sure that I get everything working. Yeah, don't miss CPI tomorrow, man. That might be, if it comes in the way that I think it will, then, nobody's going to remember that CPI, right? If it comes in hot, it will be the most important CPI all year. Because basically right now, the market is looking for the Federal Reserve to cut in August. Like the economic data the leading economic data that we've been getting shows not just disinflation, but like actual recessionary kind of variables now, which means that it is time to normalize interest rates. So if we get some sign that inflation is being more stubborn than we'd like, or is reaccelerating, basically a hotter number than the market expectation right now, it would really upset this market. Because then all of a sudden, maybe we don't cut in August, and oh yeah, that would be like the S&P 500 would turn around and go into a pullback. It would be huge still. But I don't think it's going to happen. Let's see. Maybe I'm dead wrong. All I can say, it's been really weird the way that the data has been going, because it was kind of like I was seeing some softness and I was expecting those PMIs and everything to be a little bit soft. Okay, so they came in, and then after they came in, like all of a sudden everybody's view of the market changed just like that. Just like almost overnight. And now all of a sudden you've got these people saying like that there's going to be a recession and X% decline in stocks and all these sorts of things. I will say a lot of the kind of like more professional sorts of strategies, like the Buffett indicator, for instance. These are things that we know Warren Buffett, he looks at, right? a lot of those are all of a sudden saying sell, even though we're at all-time highs. Of course, those all models could be completely wrong because they're not based off of what are the future orders going to be, right? But it is kind of have me a little bit nervous. Does have me a little bit nervous. There are some traders who use bots and they are really making money. I'm talking about Darren, the founder of POW. I don't know what that means, but I was talking about Warren Buffett, but so when we're talking about robots, you're probably referring to these automated market making strategies that they are just placing a best bid, best offer based on a certain correlated asset. And their advantage is they're so fast that they're at the front of the queue. And so when people are talking about robots, like that's the vast majority of the robot activity. And then the next level of that is momentum strategies. But you know what? I should probably get going and start preparing for the Ninja Trader stream. So again, if you go to Ninja Trader's YouTube channel, I will be on there in about 10 or 15 minutes. And I'll show you this stuff that we have with sorry. Well, it's a good thing that I have to remember all of the words right now, but implied versus realized volatility and how you can use that to help your trading in the index futures. That's what we're going to talk about. So I will see you guys over there, and I will see you tomorrow for CPI. In the meantime, stay excellent, team.